We will welcome you to the webinar. What we're going to do during the webinar is probably mute everybody, but the good news is Patrick will probably get through it within 20 to max 30 minutes of covering everything. And then what we'll do is we're going to open it up for questions, and we'll address anything and everything you've got. Feel free to raise your hand and ask questions. And what I guess we could do for the sake of starting on time is it's a little bit past 7, right? No, it's not quite 7 yet. So we'll wait a few more minutes.
You got 1 more minute.
Yeah. So has anybody else got a question or something, or is concerned on what we're going to be covering, or it's going to be a range of different types of funding that's available to you that and it's probably going to be very impactful because you got a lot of people that are focused on getting money for their real estate deals in a more expensive way than what we're going to be talking about tonight.
All right, why don't we get started?
Okay, sounds good. Let me clear that. So my name is Mark Maupin, and I'm the host tonight. I'm kind of a moderator too on Patrick. And I've known Patrick Muntz, our speaker, now for plus 30 years. He is the guy that when a mortgage company gets in trouble and can't put a loan together, they call him. And he's the one that analyzes it and figures out a solution to it and puts their deal together and gets it closed. So he's one of the most knowledgeable guys I know on financing, on business loans, mortgages, and is great because he'll actually analyze your given situation and then get you the best solution to that situation that's the most cost effective and best for you. So that's what I love about him. So with that said, I'm gonna turn the show over to Patrick and only interrupt you under ruthless compassion moments.
Okay, so yeah, just to extrapolate a little bit or dive into it, the issue with Mark's statement about how the intent is to help people is, I do not expect to get a loan out of this. I don't expect to do anything other than share with you information that is good for you, but you have to take action. And it has to be some form of business loan in today's world for a business loan. You have to have an EIN number. You should have a business that's at least been cash flowing or profitable anyway for the past 24 months. And I predict that you will probably be pleased with tonight's topics if you are in that group. This is essentially a situation where it's no pressure. All we want to do is help people. And that's all I've ever done is not look at what's in it for me, what's in it for the person who has the need, and direct them to the need and then address it and leave the decision up to them. So
Patrick, for those who don't have an EIN number and all that other stuff, we're going to be giving you solutions too. So, yeah, I mean, but I'm in agreement. That's ideally what you want to have.
Yeah.
For the first part of the presentation.
Right. So, and our interest is helping people achieve a solution.
Absolutely.
So that being said, why don't we go on to the next slide? And
so you got those who say it cannot be done should not interrupt those who are doing it. Take action.
Yeah, take action. Your business is the reason we're stressing businesses is because your business is your armor. We talked about this last week, but I do think that the disclaimers are necessary. So I want to have a complete understanding that real estate by nature is risky. You can win, lose, break even. We can't guarantee a profit or loss. We do not provide legal, accounting, or contracting advice. Everything we say is not to be taken as legal advice or tax advice in any way, shape, or form.
Said another way, please don't sue us.
Succinct and to the point. So what we try and do is help people affordably solve their problems and create solutions. And sometimes the currency becomes time and involvement. So what we're looking to do is at least be efficient about how you've come up and documented your problem or what we've got going on here. Not in any detailed manner, but in a generalist conception. So you should know at least about if you have a business.
1 second, a little housekeeping. Anybody that's got their mic on, if they can just mute it, because there's a little bit of background noise. Thanks.
So one of the things that are out there now that we've done is find all the stuff. There's all the traditional lending is done as a agency funding loan, be it Fannie or Freddie, be it FHA, VA, or USDA loans for rural properties. Anything that falls between the cracks of those loans is called a non-qualified loan. This has become sort of the new version of what was once based on the ability to repay in the direction of a alternative loan or lending that is what used to come from private money. Now the two are blurred pretty well. So in this case, what we see the market doing is shifting towards larger loans, believe it or not, all across the country. And so I cannot stress the fact that some of these opportunities in the jumbo areas are very dramatic, especially for the realtor population right now. Is the larger the loan, the more effective people can be. Where once this was an exquisite jewel that required a lot of handling, there's a lot of declines in this area. Now it's sought after, and it's an appetite with all the lenders, including the banks. But they don't have the components that we're going to talk about. They don't go down to 620. They don't go down, below 700 actually. And actually what they really want is 740 at the bank. There's no PMI with these loans that we have, and we'll go up to 90, but you're looking at 700 at 740 scores to get to 90, somewhere in that range. When I say 90, I'm referring to the loan to value. The loan to value, meaning you can get into this property for as little as 10% down. No seasoning required, and we'll do foreclosures, short sales, or BKs, or bankruptcies. And we'll work with a program that allows you to go without tax returns, W-2s, 1099s, or any other form of income verification. We'll do it with 24 months bank statements.
Wow.
Things are changing.
Yeah, 100% gift funds allowed.
Yeah, 100% gift funds allowed. And we'll use the subject property's cash flow as income if it's performing. In other words, maybe somebody's moving out and they've got a tenant in there, and you've got income coming in under a lease. We'll look at that as income. And there may be rules about that are going to develop a little later on as well, based on the seasoning on the lease. Foreign nationals, this is a whole new thing where everybody is welcome to participate in investments, and we will go with non-US credit acceptance. We'll go up to 750, and we'll do just about anything from single families to 1 to 4 units. And self-employment's okay, 24 bank statements are okay, 24 months bank statements are okay. We'll close in an LLC, which is not the case up till now. And no limit on the maximum properties financed. In other words, if you have outstanding mortgages, we don't have any limits that you can only have 10 maximum mortgages up there or whatever. So it's good for investors.
This kind of loan never existed. I've never heard of this.
Yeah, that's a home run.
Yeah.
Under certain circumstances, we'll even go down to 500 scores, but you've got to have a lot of cash reserves. You got to have some compensating factors that are going to offset a 500 score, because there's very few people that are going to consider that loan as an institution. Next. So now we got the business loan program cheat sheet here. We'll give you a quick idea as we progress through the different types of business loans. There's, people are after working capital. We will offer them revolving lines of credit. You can have some credit things all the way down to 450 in some cases. Again, but offsetting compensating factors. $10,000 in monthly sales is a pretty good start there. So it's not for everybody, but there's a lot of people out there doing retail in mom and pop liquor stores that are doing $10,000 a month or a gas station or whatever. So there's an appetite for this among the lending community and the consumer community, or shall I say the business community at this point. And it's a true revolver, meaning the revolving line of credit. You can pay it off as you go, and the payments will free up the balance and restore the balance, so you don't have to keep refinancing. Liens and judgments are okay. 6-month time in business in some cases. What they're looking for is essentially a clean version of merchant cash flow. And $10,000 a month qualifies you with these business deposits.
Wow, that's flexibility.
Yeah, and you can. What's good about this is you don't have to do daily monthly payments. We can do weekly or monthly payments, which is much less oppressive for the merchant themselves or anyone who's working with this kind of cash flow stream. And we'll go up to $200,000 on these. All right, so we just jumped around a little bit. The SBA loans, we can get you the approvals in 48 hours, but it's going to take 4 to 8 weeks to fund. And maybe a little longer, depending on what's going on with all the other draws on their staffing. 675 FICOs, or I should say credit scores, and 2 years business profitable returns. 2 years time in business, 2 years time in business, blah, blah, blah. And what they're looking for is a 10-year term. If this is hooked up with any sort of real estate, it's a 25-year amortization, meaning you buy a self-storage funding unit and you've got a lot of land and buildings on it, and you want to build a new set of buildings to go with it and put some growth funds into this, then they'll do a 25-year term, or amortization, I should say, and they'll move it to a 15-year term.
So if I was looking to actually buy a business, would this be a great source for me to do that with? Like, in other words, like a franchise business or a brick and mortar business, or?
Yeah, those are perfect franchises, brick and mortar. This is also good for a business acquisition. Imagine buying, instead of like, somebody's business, this is the largest exchange of wealth in our lifetime here with the baby boomers.
So like a lot of the things, like from an investor perspective, I was always looking for distressed situations where I could change things around. But with this program, I could find an existing good business that's up there for sale at a good price, and make a full-blown acquisition of that business. So this is like an opportunity wasn't there. And how much money do I have to put down to make this work?
You can do it as little as 10%. I'm sure they would encourage you to get into the 20% down land, but you can do it as little as 10%. It's probably driven by the credit that they're looking for, the expertise they're looking for, some of this kind of stuff. But in general, I would say that you're looking at a heck of an opportunity. Now's the best time of all, because the SBA has changed their policy for the next 4 months. 5 months, going through September 31st, where they're going to offer the ability to, uh, they'll make your payments for 6 months.
Wow.
Make your payments for 6 months, and it's not deferred. It is, they are making your payments for 6 months.
So the SBA is going to make my payments. And if my credit's excellent and everything looks right, I can get in as little as 10%.
Yeah.
All I got to do is find the right distress situation with a good upgoing running business that I can get an incredible buy. Yeah, this is unheard of.
Yeah, and not to mention the fact that the fees associated with it, not the broker fees, but the fees associated with the SBA loan itself are called guaranteed funding fees. And those fees are waived. There's 3 to 4 points. So on a $5 million deal, you're probably looking at $400,000 you don't have to come up with.
Wow.
So, yeah.
Forward.
Equipment financing is the other one, which is, it can be a lot of things. The equipment financing is something that every startup needs, especially when you look at the cost of the equipment for the printers and the phone setups and all the things, especially in a marketing type of company or anything, how expensive all these different services can add up to. So the equipment financing is a great way to offset any asset that you don't need to own. It's the cheapest way, and there's no way around it. What they like to do on these loans is attach it to real estate collateral if you have any. Raw land must have equity, or any real estate or improvements on the land would be good. So the SBA has traditionally done things like collateralize your house, things of that nature. In this particular case, they're looking for something to collateralize if they're going to extend these type of terms. And look, they'll even go down to $550 in some cases. And these are non-traditional spin-offs of the SBA model. So this is a little different, but it's not fee intensive. 1 to 5 year terms. It's got a variable rate. They can afford to be more generous on these terms. But they're looking for this trigger, this $10,000 a month in sales thing. So you can see what their target market is, the same people that are in, shall we say, opportunistic versions of merchant loans from certain vendors.
Yeah. Yeah, I'm going to ask again if everybody could mute themselves because we're getting a little bit of noise back. And I'm going to move this forward, Patrick.
Okie dokie. Yeah, so this is what the development is, and it's quite interesting, really. There's
this is all like brand new, right? Right here.
We talked about it last week. We're talking about it this week because they extended it through May 31st. So the challenge for everybody that's listening is that you're competing with people that have 600 employees, big companies that are now jumping on this and are going to gobble up these funds very quickly. So you have to move. You cannot stare at this and go, maybe I should do something, and then find out that the funds are gone. Most self-employed people and independent contractors could be eligible for this PPP. Why not put, $3,000, $10,000 in your business account as soon as possible, and set aside $2,000 of it or whatever, and the rest of it is yours to do what you want with it. If you're, a sole proprietor, if you're a LLC.
So would like a real estate agent qualify for this?
Oh, absolutely. The real estate agents are probably the people that are being indirectly targeted for this style of loan. It's for people who are cash flowing, who have a business, realize the value of the business, and yet have been running on ice for the past 20 months.
So so I'm a real estate agent. I did 2019, I made 40,000, and last year I made 30,000. This year I'm doing less. So
Yeah,
would I qualify for this loan
yes, and probably with forgiveness.
with forgiveness?
Yeah.
So it's something they should all be checking out.
Yeah, let's point out that this is a 1% loan at the very worst.
So if I was an investor, it'd be the same thing, right?
Well, it's there are a number of investors who are taking note of this and applying for this aid. But like I said, you got to be cash flowing to the point where your expenses and all the other stuff is 25% revenue reduction in 2020 relative to 2019.
Wow.
So a lot of people, yeah, they're 1% loans, they're forgivable, but we don't know the specifics of anybody's situation. So we're not in a position to give you tax advice or anything about it, but we want you to talk to your tax attorney, CPA, tax preparer. But I encourage everyone to apply for this right now. Anybody who's got a business entity of any kind. And if you don't, God knows what's coming down the road. I get a business going right away. Get a business going right away, get an EIN number, and start running all your expenses and all your benefits through your business.
Yeah. We've got a hand raise.
Yeah.
Go ahead, Mr. Thompson. You can ask your question. Just unmute yourself, or let me check to make sure you're allowed to talk. There we go.
Oops.
Whoops, I did just the opposite.
Okay, I've been like that for the longest. This is Miss Thompson, though. Hi.
Yeah, I'm sorry about that.
That's okay. That's okay. So what I wanted to know about that part is where do you apply for these PPP loans?
Oh, we have a link that we're going to direct you to very shortly in the next slide or two.
Okay, awesome. Awesome.
Yeah. And any questions or concerns you have, I'll be happy to respond to. I get calls all the time from people, so I'm happy to help. Oh, there it is. What do you know?
Yeah. So there's a couple of things that I'll show them to you real quickly, and then we'll open it up to questions from everybody. There's Patrick's email, patrick@neededfunding.com. Here's the phone number, and I'll bring the screen right back up. But if you want to, also you can go online to the site. I'm going to go there right now. I think I am. Yeah, it's going. And on the site, there's a form that you can fill out. It talks about all the different things that Patrick's got knowledge on, what he can do, different types of loans that you can do. You can go through that. But what you want to do is just go to where it says, click here to apply now. And all it is just a contact form, name, and then a few questions, and just type in what you're one you need the help on. Just takes a couple minutes to fill out, if that. And you can, Patrick will get right back with you. So with that said, feel free to ask questions right now.
Yeah, this new round of PPP loans offers a second draw for the harder hit businesses that received PP funding in 2020, and they may be eligible for a second draw if your business doesn't employ more than 300 employees and uses the full amount of the first PPP and demonstrate a 25% reduction in gross receipts. The Economic Act says that you're eligible for the draw if you've experienced these situations, But one of the things I want to do is point out,
Yeah, if somebody's an individual on mortgages, or they're just an investor that's trying to put deals together, I know you've got a ton of different programs for that, and that's something we can address in the upcoming weeks, or we'll even do some short videos and send them out to you.
yeah, we specialize in funding that is for investors. We have private money. We do what's known as transactional funding. We've got working capital loans. We've got a whole range of offerings. And of course, all the stuff that slips between the crack of all the agency funding that other lenders don't want to handle or can't find it or don't know what it is, and haven't much experience working with it. So it's a good one-stop shop for everything that you could possibly need as an investor or as a working business person. And what we found is that people just need to contact us. We can talk it over with you and decide what it is that is best for you. Yeah. And again, I can't stress enough all the independent contractors and self-employed people that should be applying for these things, even gig workers, self-employed individuals, pretty much anyone who has 1099 income can now qualify for PPP loans. This was not allowed in the first round. So as long as you're in an operation before February 15th, 2020 and reported taxable earnings as income for 2019 or 2020, you can likely apply for PPP assistance. And this is for freelancers, independent contractors, consultants, sole proprietors who have no employees. So this is kind of a home run for everybody. But like I said, once these big heavyweight companies start coming in and the floodgates are open as of yesterday, I would be surprised if the funding wasn't gone within 30 days if you don't act now. You want to get something going. Not saying that it would all be closed or anything, but I noticed that some of the banks are already saying they won't accept applications at the end of April. That's how much of a response they're anticipating.
Wow.
So you want to get on this. This is not a ho hum la di da thing. This is a jump on it now thing. All right, we got some hands up here. Some stuff's going on.
Nope, no questions showing though.
Yeah,
So
okay.
you guys are
I
quiet.
think some people are muted.
Yep.
All right. Well, anyway, I guess what I'm trying to say is the stuff you need to provide is not excessive by any stretch. In fact, for somebody who's just a sole proprietor with a W-2 Schedule C, a 1040, what they call C, sole proprietor, would be somebody who would almost automatically qualify as long as they showed 25% difference in revenue between pre-COVID and post-COVID.
Got it. Well, I guess if there's no more questions, we'll end this, and feel free to ask Patrick questions. We appreciate you being on.
Yeah, we do appreciate everybody being on.
Patrick's done some other really short seminars and short videos on different types of loans. You can get that all on my YouTube channel. So if you go in and Google Mark Maupin YouTube channel, there's just tons of videos there, educational type videos. There's no charge on any of them. You'll find a lot of value there. So we appreciate you coming on, and I'm going to end the meeting.
Thank you so much. It was a pleasure to see everybody here.
Thanks, guys.
Yeah, thanks for having me.